Hey everyone, this is Julian from the Binary Lab, and in this video is a weekly mindset video. It's going to be a little bit different from the usual because I'm talking about how morons trade Forex. So this is not the usual, because we usually talk about binary options trading. Today is about Forex, and the reason why I want to talk about that is because I'm aware that a lot of people out there, in fact, more people trade. Ow, 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 my feet. More people trade Forex than binaries, and I mean, I really wish more people traded binary. But for those people who trade Forex, if you're good there, or you just for some reason like to trade that, and also because we recently had one of our partners falling out really epically on Forex, which I no longer work with. I want to talk about mistakes that people make in Forex trading. Okay, and see, these are some of the biggest things that they make. I'm going to be going over them very quickly, and then later on I'll be elaborating on what each of them mean. So these are some of the big no-nos in Forex trading. First and foremost, quiet. Okay, the first thing that people often do is cut winners short. Second, letting losers run. Next, chasing the market. So these are three of the These are three of the fundamental errors in trading Forex. What do they really mean, though? I mean, by the way, at the end of this video, I'm going to be doing a comparison between Forex and binary. Can you stop rocking the table? If you want to move around, just move around, but don't shake the table. Okay. Okay. So, if you're doing these, if you're doing like I'm showing the differences between Forex and binary. Lost my train of thought a little bit at the end of this video, but in the meantime, I'm going to run through a little bit. So, cutting the winner short. What does that mean? So very often, when someone is seasoned to making losing trades, when they finally have a winner, they'll be like, "Oh yeah, I'm winning." But at the same time, I'm so afraid that this trade is going to run into a negative. I'm so afraid that this trade is going to end up the same way as all my other trades are. A person who often cuts winners short is someone who does not know or does not know how to read charts or trust his own interpretations of the market. So, in fact, the person that commits all these three mistakes are people who have no understanding of how the graphs work, how the markets flow, and just fall back on personal gut instinct. And if it was as simple as gut instinct, we would have all been millionaires long ago. But the reason why we look into charting is because it's not as simple as that. Does it make sense? So in my trading group, I teach people how to look at graphs and charts, and the methods that I teach, they not only work in binary, but they also work in Forex. So getting back to the example, someone who's often losing finally gets to win, and then he is in. Can you stop playing the curtains? Get out! It's dusty. Get out of there. Okay, so when they get out of when they in a 10 pip positive, okay. For example, they're always losing 15 pips. They're always losing 20 pips. But now, when they're in a 10 pip positive, they cut the trade. Long term, what's going to happen? Okay, or let's say cutting losers short could also in a way that they're making all these big losses, but when they make the win, it's a very tiny trade. That's also the same effect. You're letting your losers run, you're cutting your winners short. What about letting your losers run? Okay, when you cut your winners short and then you let your losers run, what happens with that is that you are thinking in your head, okay, just a little bit more. If I could hold this a little bit more, maybe I'm going to cancel out the stop loss. I know it's approaching my stop loss at 15 pips, but I want to, I want to take it away because I think it's going to turn around and I'm going to make back all my money. Never happens. So that 15 pip stop loss becomes 25 pips, and when it's just about hit 25 pips, it goes on to, you decide, oh, okay, I'm going to shift it to 50, or I'm going to shift it 150, and then suddenly your win, your risk reward becomes 10 times to 1, because your appetite for a loss becomes 10 times as big as a win. And what happens then? What happens then is that you have negatively geared your account. You have set it in a on a on what do you call that? When you ride a car, sometimes you put a block on the pedal and you jump out of the car, and you've set it on a path of destruction. That's what you've done. So, chasing the markets. What's up with chasing the markets? Let's say that when you lose a lot of the time, and sometimes you are afraid to take the right trades. Again, this happens because of your inability to manage your feelings. So you start to take the trades too late. You think that, okay, I've lost so many times, maybe the next one's going to be a loss as well. I'm not going to take it. And then, oh crap, I missed a winning opportunity. And then I decide that, okay, I'm going to take this. I'm going to take this next trade, but the price has already moved so much. It's better late than never. I'm gonna join it right now. But if you listen to my teachings, I teach people how to draw Fibonacci's, and then I teach people that if the retracement has already moved for more than 11.1 or 23.6%, you're not guaranteed of any further retrace. But these morons will go in anyway because I think, okay, I missed out enough. I'm gonna go in now. And I think, oh, it's better late than never. But it is better. It is better never than late. It's better never than late. Let me tell you that. So, now putting these things together, I know some of you out there run martingale-based systems in Forex. Okay. Martingaling in binary and Forex is very, very different. I would say in binary is safer. That a lot of things are actually safer in binary than Forex. In Forex, there's a lot of potential for a lot of profit if you know how to do it right. But if you apply the wrong principles to Forex, you could get burned a much bigger way as well. And that's why I wanted to educate you and warn you against as well. So a lot of you guys may be running some kind of a grid trader online. You found it from some Forex forum. Maybe you purchased it somewhere. Maybe you're following like a trade cloning service, okay? That done that. I mean, recently, I heard of a bunch of traders that were involved in some kind of these martingale style automated trading on robots. And when people start to get very anxious about their trade, what do? Intervention. When they do intervention, they often see that, okay, I see a big winning trade here, and it's making so much money, I'm going to close it short. What happens? What happens is that the automated system will have to recalculate the exit for the other remaining positions, and it's often going to make it a bigger movement. It's going to require a bigger movement in order to exit those trades with a break even or a profit. So by cutting the winner short, you are sabotaging yourself. If you really wish to cut winner short, you also have to cut an equal amount of losing positions. If you took out the biggest winning trade and maybe the biggest two losing trades, then perhaps, due to the auto recalculation of the exit, you still have a similar or if not better exit point with a lot less risk exposure. Does it make sense? So that is what you should be doing. A lot of people don't do that. A lot of people negatively gear their accounts. So it is not my main area that I teach. It's not my main area in Forex. I teach binary through binary options trading webinars, but the methods that I do, for example, I have a moving average method that I have been showing my group on how you can actually capture between 1.5 and even 4 times of your stop loss on a very regular basis. Okay, this is for those who want to trade Forex. It works. Okay, so I teach that from time to time. If you're in the binary lab already, ask me on the webinar and I'll share it with you. I've done a couple of times on some of the webinars, but if you want more examples, I will share with you on the webinars in it. And let's say if you are not already, in the binary lab, join in. Go down to the link below. I believe it's thebinarylab.net/join-binary-lab. Okay, so the links are down below. Just click that. Finally, I'm going to explain to you what's the differences between binary options and Forex trading. Okay, so these are my son and daughter's stuffed toys. What does that got to do with anything? Okay, it's a little bit like binary is kind of like mixed martial arts. In Forex, when you win and lose based on the trends. Okay, you make a lot of money if you can predict and capture a big trend. Enter when the trend starts, exit when the trends just run out of steam, and we capture a very big range. That's the best way to profit in Forex. Also, the lowest risk way of profiting in Forex. High risk ways of profiting in Forex includes scalping. Okay, because scalping, usually people don't set a stop loss. There's no time to set a stop loss. They get in and out very fast. But when it does not take the correct movement that you expect, that's where you get in trouble, because that's when your typical you're gonna have like a 10-to-1 risk to reward ratio, which is pointless. Risk reward, I mean that your risk is 10 times of your reward. In binary, it is okay to scalp. It's okay to go for those very tiny retracements. And why is that? Like I said, it is a little bit like mixed martial arts, wrestling, grappling, jiu-jitsu, whatever. And so, all you need to do is to be able to hold down your opponent for like 10 seconds. So if you grapple him down for like 10 seconds, the referee counts from 1 to 10, or 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Even if this guy busts him off and like kicks him off, and after that, the match is over. There's already a victor, and it doesn't matter. Okay, so many times a lot of critics would look at my trading and say that, hey, do you know that trade that you just picked, you may have won by 1.6 pip, you may have won by 4 pips, but it shot up like huge amount the other way right after that. That's not my problem, because the whole point was to capture that small period of consolidation, that short period of retracement. I don't need a reversal to make money. Okay, in Forex you need a breakout or a reversal to make money. But in binary, you can make money with retracements. How do you do that? You gauge the average length of a retracement, and then you basically set a trade for just that amount of time, or less than that, so that you're not giving the trade too much time to hit a support resistance level and go back beyond to follow the trend. You're giving it just enough time to bounce off a certain Fibonacci extension, retrace a certain amount, and by that time, before it hits the support level and goes back off to follow the trend again, you're out. So that's the differences between binary and Forex. Is binary or Forex better? Well, I think they both have their advantages, but I believe that binary is a great way to start out, and let's say if you it's a great way to grow your capital as well. Because Forex, if you want to make lots of money safely, you want to have a bigger capital and risk less. I mean, it's all the same way. But the other thing as well, like there are no like overnight trades. It's not the same way. All these trades are very short term. I personally believe that if you are simply looking to make about like 70-80% of whatever risk that you lay down, then you're much better off doing that within 2 minutes than within 2 hours, right? So that's all I wanted to say in this video. My name is Julian from the Binary Lab. If you felt this video was helpful, share it on your social media, like this video, subscribe for more, and I look forward to giving you more great videos just like this. And if you want to see me trading the charts live, okay, live actual charts and trade breakdowns, go to Binary Lab, thebinarylab.net/join-binary-lab. Bye for now.